Folks, today we are diving into two hot penny stocks that have the potential to make you rich if you're willing to do your homework and act before the broader market catches on. These are not your typical low-float pump-and-dump plays. These are solid, strategic companies that have all the right ingredients for explosive upside. They're innovating, expanding, partnering with industry leaders, and best of all, they're still trading at prices most investors can afford. These are not random stocks. These are backed by fundamentals, visionary leadership, real assets, and the kind of future potential that big money on Wall Street is starting to notice. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The first on our list is Lloyds Banking Group plc, trading under the ticker LYG on the New York Stock Exchange. Lloyds may be a familiar name to some, especially in the UK, but what most investors don't realize is how this traditional banking giant is now stepping into the future with moves that could change its entire trajectory. Lloyds is not just any regular bank. It's one of the largest financial institutions in the United Kingdom, primarily focused on retail and commercial banking. But what's really putting Lloyds in the spotlight right now is its recent partnership with one of the UK's most innovative artificial intelligence startups, Unlikely AI. This isn't just a regular tech partnership. On July 2nd, Lloyds announced a collaboration with Unlikely AI to pilot a groundbreaking neurosymbolic AI technology within its organization. And that is a big deal. The neurosymbolic approach combines neural networks, what you typically think of when it comes to deep learning, with symbolic reasoning, which allows machines to make logical, structured, and explainable decisions. The idea here is to create AI that doesn't just spit out results, but can explain how it got there, something especially crucial in heavily regulated industries like banking. Unlikely AI was founded by William Tunstall-Pado, the same tech visionary who created Evie, a voice assistant acquired by Amazon and eventually integrated into Alexa. So we're not talking about a startup with no track record. This is a proven innovator bringing cutting-edge technology to a financial titan like Lloyds. The proof of concept is currently running in what Lloyds calls its innovation sandbox. This means they're already experimenting internally with how this AI can be responsibly deployed across the organization, supporting staff and customers with consistent, accurate, and regulation-compliant support. And if it works, and all signs point toward this being a breakthrough, it could not only streamline operations across Lloyds, but set a new standard for the entire banking industry in terms of how AI is implemented. From a financial perspective, Lloyds is looking solid. In Q1 of this year, the company reported a net income of £4.4 billion, a 4% increase year over year. That growth was driven by stronger net interest income and higher operating income, which shows the bank is growing on both the lending and non-lending sides of its business. The net interest margin came in at 3.03%, which is 6 basis points higher than the previous quarter, an important metric showing they're making more money on their loans. Operating costs were £2.6 billion, up 6% year over year, but that includes some planned severance and restructuring costs. If you strip those out, the increase is only 3%, which is very manageable for a bank of this size. On the asset quality side, things are also looking strong. The Q1 impairment charge stood at £309 million, which is roughly 27 basis points. This suggests their loan portfolio remains resilient and they aren't facing major credit risk. Also noteworthy is their tangible net asset value, or TNAV, which climbed to 54.4p per share, up 2p from the end of 2024. That means the bank is literally becoming more valuable at a balance sheet level, quarter by quarter. As of now, the stock is trading around $4.16 per share. Yes, it's technically a penny stock by US standards, but this is not a distressed or speculative company. This is a profitable bank with innovation at the core of its next evolution. In terms of analyst projections, 13 Wall Street analysts have issued 12-month price targets. The average price target is 82p, with a high forecast of 100p and a low forecast of 70p. That average estimate reflects an 8.84% increase from the current 75.34p level. And remember, that's in British pounds. When you account for exchange rates and the fact that this stock is trading on both UK and US markets, the growth potential becomes even more attractive. Now let's turn to the second red-hot penny stock that's making waves, NovaGold Resources Incorporated, which trades on the NYSE American under the ticker NG. Unlike Lloyds, which operates in the financial sector, Nova Gold is all about precious metals, and more specifically, it's all about one of the most lucrative and high-potential gold development projects in the entire world. Nova Gold owns 60% of the Donlin Gold Project, which is one of the highest-grade, largest undeveloped gold deposits globally. This project is so massive, so rich in potential, that it has the power to transform Nova Gold from a low-key development stage company into one of the biggest names in the gold mining world. Just a couple of weeks ago, on June 25th, Nova Gold released its Q2 2025 earnings report and gave investors a lot to be excited about. The company announced that it had completed the acquisition of an additional 10% stake in Donlin Gold LLC from Barrick Gold Corporation for $200 million. That move raised Nova Gold's ownership from 50% to 60% and shows their absolute confidence in the value of the project. But perhaps even more exciting is the fact that Paulson & Company, one of the most respected hedge funds in the world, managed by billionaire investor John Paulson, has acquired the remaining 40% interest for a whopping $800 million. This means the Donlin project is now jointly owned and governed by Nova Gold and Paulson, two heavyweights in their respective sectors. This is not just a financial transaction, it's a strategic alliance. Financially, Nova Gold did post a net loss of $54,275 for the recent quarter, but this was largely due to a one-time non-cash charge of $39,607 related to warrants issued under a backstop agreement. So this wasn't operational failure. It was more of an accounting item related to financing. Once you adjust for that, the company remains financially stable, with plenty of liquidity to fund ongoing exploration and development. The current stock price sits at $4.72, but the upside here is significant. According to two Wall Street analysts who recently provided forecasts, the average 12-month price target is $6.06, with a high forecast of $7. That means investors could see a 28.39% gain just based on average projections. And if gold prices spike or the feasibility study reveals even stronger economics than expected, that upside could easily double. Nova Gold is in a rare position. It holds a controlling interest in what could become one of the world's most important new gold mines, has the backing of a major hedge fund, is advancing development quickly, and is operating in a politically stable and mining-friendly region. When you put it all together, the scale of the resource, the strength of the partnerships, the positive trajectory of gold prices, and the company's financial position, it's easy to see why many believe NG is one of the best penny stock opportunities in the market today. Well, that concludes our list of 2 hot penny stocks to buy right now if you're serious about building real wealth in the months and years to come. Lloyd's Banking Group is bringing AI to the world of finance in a way that could transform how banks interact with customers and regulators, while Nova Gold Resources is sitting on what may be the biggest gold discovery of the decade. Both companies are operating in very different industries, but both share the same explosive potential. Whether you're into cutting-edge fintech or the safety of gold during uncertain economic times, these are 2 stocks that deserve a spot on your watch list. Thanks for watching. If you found this video helpful, make sure to subscribe and turn on those notifications so you never miss an update on the hottest stocks in the market. Until next time, invest smart and stay ahead of the game.